All right, earnings call fans, welcome back to Talk Dickers.
Yeah,
Today we're going to do a deep dive on the latest from Chamers.
that chemical giant.
Yeah, they had their fingers in so many pies.
I know, right? It's unbelievable how diverse their portfolio is.
Yeah.
We've been poring over their Q3 2024 earnings call transcript.
Yeah.
And, the market's reaction
Trying
to find the real gems,
to pull out.
the surprises, the stuff that makes you go, huh, I didn't know that.
Especially when the stock CC jumps over 15% on the day of the call.
Something clearly got investors excited.
So let's break it down.
Yeah,
Chamers had unveiled a fresh strategy they're calling Pathway to Thrive.
catchy.
Catchy, right?
It is.
But what does it actually mean?
So it's built on 4 key pillars.
Okay.
And the first one they hit hard is operational excellence.
Mhm.
Think leaner, meaner, more efficient.
Okay.
The kind of thing that gets Wall Street analysts drooling.
Right.
They're targeting over $250 million in cost savings by 2027, which is a significant chunk of change.
That's some serious belt tightening.
It is.
Are they just slashing jobs and salaries to get there?
Not necessarily.
Okay.
They're talking about a more holistic approach.
Right.
Everything from optimizing their procurement processes to implementing new technologies that boost efficiency across the board.
Mm-hmm.
It's about creating a culture of continuous improvement, which can be really powerful in the long run.
So it's not just about making cuts, it's about doing more with less.
Exactly.
Smart move, especially in this economic climate.
Right.
But what about growth?
Yeah,
Cost cutting alone isn't going to get you a 15% stock jump.
you're absolutely right.
Okay.
And that's where their second pillar comes in,
Mhm.
enabling growth.
Right.
They're laser focused on certain high growth markets that have the potential to really move the needle for them.
Okay, give me the rundown.
Okay.
Which markets are catching their eye?
So data center cooling is a big one.
Okay.
You might not think of Chamers when you think of data centers.
Yeah.
But their Opteon 2P50,
Mm-hmm.
a 2-phase immersion cooling product, is making waves in that space.
Interesting.
They're also going after next-generation refrigerants,
Okay.
riding the wave of the U.S.'s shift to low GWP refrigerants under the AIM Act.
Mm-hmm.
That's the American Innovation and Manufacturing Act, which phases down the use of hydrofluorocarbons, or HFCs.
So Chamers is positioning itself to benefit from this regulatory shift.
Precisely.
Yeah.
And let's not forget their high-purity Teflon PFA resin.
Right.
This stuff is absolutely critical for semiconductor manufacturing.
Okay.
You're talking about those tiny, intricate chips that power everything from our phones to our cars.
Wait, Teflon and semiconductors. I thought Teflon was just for nonstick pans.
It's actually incredibly versatile.
Wow.
And Chamers has developed a specific type of Teflon PFA that's essential for creating the ultra-pure environments needed for semiconductor fabrication.
Hmm.
They've already got a new production line for this up and running,
Okay.
contributing to growth in their performance solutions portfolio.
That's fascinating.
It is.
It really shows how Chamers is leveraging its chemical expertise to play a role in some of the most cutting-edge industries out there.
Right.
But let's switch gears for a second
Sure.
and talk about their refrigerants business,
Okay.
because there was some interesting and potentially confusing news on that front.
Absolutely.
Yeah.
Their Thermal and Specialized Solutions business, or TSS, actually had a record quarter, driven by strong demand for their option refrigerants, which are those low GWP options we mentioned earlier.
Mm-hmm.
But here's the twist. Prices for their legacy Freon refrigerants have plummeted due to high inventory levels, and they expect that to persist into 2025.
So it's a bit of a mixed bag for their refrigerant business.
Yeah.
One hand giveth, the other taketh away.
That's a great way to put it.
Yeah.
But the long-term story for option looks promising.
Mm-hmm.
They're projecting double-digit growth in 2025, fueled by that ongoing transition to low GWP refrigerants. They're basically riding the wave of both technological innovation and regulatory change, which is a pretty sweet spot to be in.
Okay, so one refrigerant is down, but another is poised for takeoff.
Yeah.
Got it.
Uh-huh.
But didn't they also have some challenges with their titanium dioxide business earlier this year?
Yes.
I seem to remember a drought impacting production.
You have a sharp memory.
Okay.
They did indeed face some headwinds with that drought.
Mm-hmm.
But despite the lingering impact, their titanium technologies, or TT business, still managed to exceed its cost-saving goals for the quarter.
So they're squeezing out efficiencies even in the face of adversity. That's impressive.
It is.
But what does the future hold for their titanium dioxide business?
Well, they're cautiously optimistic,
Let's make that.
especially with the possibility of interest rate drops potentially boosting demand for TiO2.
Mm-hmm.
It's still a wait-and-see situation, but they're clearly focused on navigating the cyclical nature of that market.
Speaking of waiting and seeing, there was one move that really caught my eye in the transcript. Their decision to hit pause on their Nafion expansion in France.
Mm-hmm.
For those who don't know, Nafion is a key component in hydrogen fuel cells, which are a big part of the clean energy transition narrative.
Right.
So what's the deal with this pause?
Yeah.
Is Chamers getting cold feet about hydrogen?
It definitely raised some eyebrows.
Yeah.
They're citing near-term weakness in the hydrogen market as the reason, which makes sense from a capital allocation perspective.
Yeah.
But it does make you wonder about the overall hype surrounding hydrogen and whether it's living up to expectations.
Is the hydrogen bubble bursting?
Too early to say for sure.
Okay.
But Chamers' decision to hit pause suggests they're taking a more cautious approach, which is understandable given the uncertainties in that market.
Yeah.
It's a high-risk, high-reward situation, and they're clearly weighing their options carefully.
Smart move, especially when you consider the other challenges they're facing.
Right.
And speaking of challenges, we can't ignore the elephant in the room.
Yeah.
Those legacy PFAS liabilities.
That's right.
This is a complex and potentially costly issue.
It is.
And Chamers' CEO, Denise Dignam, gave a pretty detailed breakdown of the types of claims they're facing.
Yeah.
What jumped out at you from that discussion?
I think what's fascinating is that resolving these liabilities isn't just about writing a check and making them go away.
Right.
It's about maintaining a constructive dialogue with regulators
Okay.
who are also, crucially,
Yeah.
the ones who control permits for their business growth. It's a delicate balancing act.
So they need to keep those regulators happy while also navigating these claims.
Yeah.
Sounds like a full-time job in itself.
Absolutely.
Right.
It highlights the long game Chamers is playing.
Mm-hmm.
Resolving these issues isn't going to happen overnight.
Right.
It takes time, careful negotiation, and a deep understanding of the regulatory landscape.
Well, I think we've laid some excellent groundwork here. We've got a sense of Chamers' strong Q3 performance, their ambitious new Pathway to Thrive strategy, and those looming legacy liabilities.
Yeah.
But before we dive deeper into those 4 pillars of their new strategy, I think it's time for a quick break.
I agree.
A little mental reset before we tackle those pillars head on.
Yeah.
We'll be right back after this quick message.
All right, so let's unpack those 4 pillars
Yeah.
of Chamers' Pathway to Thrive strategy. We've already touched on operational excellence,
Yeah.
their drive to become leaner and more efficient.
Right.
But what does that actually look like in practice?
Well, they mentioned a goal of over $250 million in cost savings by 2027.
Yeah,
That's a pretty eye-catching number,
it is.
especially for investors
yeah.
who are always looking for a good return.
Exactly. And they're not just talking about arbitrary cuts.
Okay.
They're looking at optimizing their entire supply chain, negotiating better deals with suppliers, streamlining their manufacturing processes, even leveraging data analytics to identify and eliminate waste.
So it's about squeezing every ounce of value out of their operations.
Yeah.
That kind of efficiency can be a real competitive advantage,
It can.
especially in a market where margins are constantly under pressure.
Absolutely. And it frees up resources to invest in those high growth areas they're so excited about. Which brings us to their second pillar,
Okay.
enabling growth.
Right.
This is where things get really interesting.
Yeah. We already talked about those key markets.
Right.
Data center cooling, next-gen refrigerants, and that high-purity Teflon PFA
Yeah.
for semiconductors.
Yeah.
But what specifically are they doing
No.
to capture those opportunities?
For starters, they're pouring resources into research and development.
Okay.
They're constantly tweaking their existing products and developing entirely new ones to meet the evolving needs of those markets. Take their Opteon 2P50 for data centers.
Yeah.
It's a cutting-edge solution that offers superior cooling performance with a lower environmental impact.
Right.
That's a winning combination in a world where data centers are growing exponentially.
It's like they're playing chess while everyone else is playing checkers.
I like that.
Yeah, they're anticipating those future needs and positioning themselves to be the go-to provider.
Exactly. And they're not afraid to make bold moves.
Okay.
Remember that new production line for their Teflon PFA resin?
Yeah.
They're ramping that up to meet the surging demand from semiconductor manufacturers.
They're clearly putting their money where their mouth is.
They are.
Yeah, it's not just talk. They're actually making those investments
Yeah.
to seize those opportunities.
Which is exactly what you want to see as an investor.
Right. Actions speak louder than words.
Absolutely.
And Chamers is walking the walk.
They are.
All right. So we've got operational excellence and enabling growth.
Yep. Yeah.
What about the third pillar,
Okay.
portfolio management?
Yes.
That one sounds a bit more abstract.
Yeah.
What does it actually mean for Chamers?
So this is all about being strategic. With their existing businesses and assets, it's about shifting their focus from just selling products to identifying and targeting high-growth, high-margin applications for those products.
Okay.
They're also taking a hard look at their asset footprint, particularly in their advanced performance materials segment, to make sure they have the optimal mix of resources to support their growth goals.
So it's not just about what they sell, but how they sell it.
Yeah.
And where they focus their efforts.
Precisely. They're analyzing market trends, identifying the most promising niches, and making sure they have the right products and capabilities in place to capitalize on those opportunities.
Okay.
They're also not afraid to make tough decisions.
Right.
Even if it means divesting certain assets or streamlining operations to focus on their core strengths.
It's like pruning a tree to make it stronger and more productive.
It is.
Yeah, you get rid of the dead weight so the healthy branches can flourish.
That's a great analogy. And it's a sign of a company that's thinking strategically about its long-term future. They're not just chasing every shiny object. They're making deliberate choices about where to allocate their resources for maximum impact.
So we've covered operational excellence, enabling growth and portfolio management.
Yes.
That brings us to the final pillar,
Okay.
strengthening the long term.
Yeah.
This one seems a bit more nebulous than the other.
It does.
What exactly does it entail?
So this pillar is all about creating a sustainable and resilient business that can thrive for decades to come. It encompasses several key areas.
All right.
Starting with resolving those legacy PFAS liabilities we discussed earlier.
Right. Those legal issues are definitely a cloud hanging over their heads.
Yeah.
How are they approaching those?
They're committed to resolving those claims responsibly and fairly.
Okay.
They're actively engaging with regulators and communities to find mutually agreeable solutions. It's a complex and often slow-moving process.
Right.
But they're making progress.
So it's not just about throwing money at the problem.
No.
They're taking a more collaborative and holistic approach.
Exactly. They understand that these issues go beyond just legal and financial considerations. They recognize the importance of building trust and maintaining a positive reputation, which is essential for their long-term success.
It's like they're playing a long game.
Yeah.
Not just looking for a quick fix.
Precisely. They're building a foundation for a future where they can operate sustainably and ethically.
But it's not just about legal issues, right?
Right.
What else falls under this strengthening the long-term umbrella?
So it also includes their commitment to responsible chemistry and their advocacy for policies that support sustainable manufacturing practices. They're working to reduce their environmental footprint, promote worker safety, and advocate for regulations that ensure the safe and ethical use of their products.
So it's about being a good corporate citizen, both environmentally and socially.
Absolutely. They're taking a holistic approach to sustainability, recognizing that their long-term success is intertwined with the well-being of their employees, communities, and the planet.
It sounds like they're trying to bake sustainability into their DNA.
Yeah.
Making it an integral part of their business model.
Exactly. And that's something that's becoming increasingly important to investors and consumers alike.
Makes sense. So we've got these 4 pillars. Operational excellence, enabling growth portfolio management, and strengthening the long term.
Yeah.
They all seem pretty interconnected.
We are.
Like pieces of a puzzle that fit together to create a bigger picture.
I agree. And that bigger picture is a Chamers that's leaner, more agile, and more focused on the future. They're tackling those legacy issues head on, while simultaneously positioning themselves for growth in some of the most dynamic and exciting industries out there.
All right, so we've dissected those 4 pillars.
We have.
And it's clear that Chamers has a lot going on.
Yeah.
They're juggling multiple balls in the air, but they seem to have a clear vision and a solid plan for achieving their goals.
It seems so.
Now, before we jump into our This Is Not Financial Advice segment and concoct an outrageous trade idea based on all this intel, I think we need a little breather.
I agree. A mental palate cleanser before we get to the speculative fun.
Exactly. Welcome back to Talk Tickers Earnings Call Aficionados.
Back again?
We've journeyed through Chamers' Q3 performance. Explored their Pathway to Thrive strategy. And now it's time for the grand finale, the This is not financial advice segment.
This is my favorite part.
This is where we let our imaginations run wild
Yes.
and cook up a trade idea that's so outlandish.
So audacious.
It could only exist in the realm of pure speculation.
Right.
Buckle up, folks, because
Yeah.
this is going to be a wild ride.
Hold on tight.
Remember, this is purely for entertainment purposes.
Yes.
Do not, I repeat, do not base any actual investment decisions on what you're about to hear.
Please.
We've already established that Chamers is betting big on those high-growth applications.
Yeah. Data centers, next-gen refrigerants,
Yeah.
semiconductors.
So where do we go from there?
I don't know. What do you think?
Well, if we're going for outrageous, we need to think beyond just buying Chamers stock.
Yeah.
We need a play that's truly contrarian.
Right.
Something that would make even the most seasoned hedge fund manager raise an eyebrow.
I like where this is going.
Oh, here's the scenario.
Lay it on me.
We go long on Chamers, obviously.
Okay.
But to spice things up, we simultaneously short.
What is it?
Drumroll, please. A basket of companies heavily reliant on traditional data center cooling technologies.
Whoa, that's a bold move.
Right.
You're basically betting that Chamers' immersion cooling technology will disrupt the market and send those traditional cooling companies into a tailspin.
Exactly. High risk, high reward.
High risk indeed.
We're talking about a potential paradigm shift in the way data centers are cooled, and Chamers is at the forefront of that revolution.
But it's a long shot, right?
Oh, absolutely.
The traditional cooling companies have been around for decades.
Right?
They have established relationships.
For sure.
And they're not going to go down without a fight.
Of course it's a gamble.
Yeah,
A glorious, reckless, utterly irresponsible gamble.
it really is.
But that's what this segment's all about.
Right.
We're not claiming to be financial gurus here.
No.
We're just exploring the outer limits of market speculation.
Exactly.
And it's a lot more fun than just recommending plain vanilla stock picks.
It is.
Who wants to be boring when you can be audacious?
Much more fun.
Exactly. So there you have it, folks.
There it is.
Our totally nonsensical, not at all the good idea, trade idea.
Don't do this.
Long Chamers, short traditional data center cooling.
All right.
Do not try this at home
Or anywhere, really.
or anywhere, really. But it does make you think, doesn't it?
It does.
About the disruptive potential of new technologies and how companies like Chamers are shaking things up in unexpected ways.
Absolutely. And that's what we love about diving into these earnings calls. Right.
You never know what nuggets of insight you're going to uncover, what trends you'll spot,
Yeah.
what possibilities will spark your imagination.
It's like panning for gold in a river of information.
It is.
You have to sift through a lot of mud and debris.
Yeah,
But every now and then you find a nugget that makes it all worthwhile.
so true.
Well said. And on that note, we've reached the end of our Chamers deep dive.
That was fun.
Hopefully you've enjoyed this wild ride with us.
Yeah,
We've covered a lot of ground today.
we have.
From their strong Q3 performance to their ambitious pathway to thrive strategy, from those legacy PFAS liabilities to that crazy trade idea that will hopefully never see the light of day.
Hopefully not.
But most importantly, we hope we've given you a better understanding of this complex and fascinating company.
I hope so.
And maybe even spark some curiosity about the role of chemistry in our everyday lives.
Because chemistry is everywhere,
It is.
even in places you might not expect.
Right. From the chips in our phones to the refrigerants in our air conditioners, Chamers is quietly shaping the world around us.
And who knows what they'll come up with next? That's the beauty of it all.
It is.
The endless potential for innovation, for disruption,
Yeah.
for creating a better, more sustainable future.
So keep your eyes peeled, your ears open, and your minds engaged. The world of earnings calls is full of surprises, and we'll be here to guide you through the most intriguing ones.
Until next time, happy investing. And remember, do your own research, seek professional advice, and never ever take our word for it.